Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Crisis happened to me mere 15 minutes ago. Actually, I shouldn't say crisis considering the last time we did this show, what happened, but we will talk about that in a second. But anyway, after the bond market closed, I closed my eyes for about a half hour, fell into a little bit of a meditative sleep, went up, tried to go down to the kitchen to get myself some coffee. And my wife's like, "You can't walk on the kitchen floor. I just mopped it." I'm like, "But I can't do a show without coffee after I just woke up. You know how crabby I am." She's like, "Well, you're going to have to figure something out." So finally she went and she had to go to the bathroom. So I snuck in there in my socks and heated up my coffee. So I'm waiting for it to kick in. For you guys who are watching, we appreciate coming back. Last week, we had Tony Nash on the show. We had to cut the show early because we were live on the air when the news broke of the tragedy a week ago with Charlie Kirk, and we just didn't feel like talking after that. So thank you guys for joining us again. Today was Fed Day. Fed cut by 25 basis points. They actually made it seem like they were a little more dovish than before, signaling 2 more cuts by the end of the year. Donald Trump's new lapdog, Stephen Marin, said 50 basis points. He dissented. Is that rude to call him that, or is it just factual?
No, it's factual at this point. I think
it's factual at this point. Factual. He was handpicked by Donald Trump. Donald Trump wants lower rates. He called for lower rates. So again, he's Donald Trump's mouthpiece. I'm not even saying he's wrong. I do think he's wrong, but just the facts are the facts. That's the way it's lining up. But anyway, last week we had on our friend Tony Nash. Let's bring him back now. Tony Nash, who is the founder of Complete Intelligence. He'll tell you all about it because it's a fascinating company. Let's bring on Tony. Tony, how are you, my friend?
I'm good. How are you? Thanks.
Good. In the green room, we were talking about college football, and you showed surprise about the Illini being number 8 team in the country, which I'm surprised by that too. So actually the real Illinois faithful kind of like, we don't really talk about it out loud because we think it might be a little bit of an exaggeration.
Okay. So who has Illinois played? They've played Western Illinois.
Yeah, they played Duke at Duke.
Like Central Michigan. Oh, and Duke. Duke, sorry.
We don't laugh at Duke anymore in football.
Yeah, we do.
Duke's had some okay teams.
We laugh at Duke.
Okay, here's what I will defend. Last year, we were 10-3, beating some good teams, including South Carolina in the bowl game, which we actually beat and kind of bullied a little bit, which was pretty damn funny.
So Illinois was in a bowl game last year?
Don't even start with me, Tony.
By the way, Jimmy, in the green room, you're also saying that you love your son-in-law, and because of him and him going to Notre Dame, you now root for Notre Dame.
I do indeed.
If you loved your son-in-law, you would get him to stop rooting for Notre Dame.
No. I hated Notre Dame my entire life, and now I root hard for Notre Dame.
It was a good weekend for us.
Yeah, I know. By the way, you will give me this, though. Now that I'm a big Notre Dame guy, which I hated my whole life, they make a really tough schedule for themselves. That's impressive. Most teams don't do that to the tune. Oh, don't even. Right? Okay, you talk. Right?
No, I love that he's doing that right now.
Me too.
All right, look. Last week we were overly, let's call it stressed out, anxious over what happened to Charlie Kirk. So this week, let's actually focus on markets, not on bad Illini football or crappy Notre Dame fans. Tony, we just had the rate cut. Mm-hmm. Okay, you saw, I don't know how much of it you saw. I think the thing that struck me the most is that here's the part to me that got me. The revision that happened last week, the 911,000 jobs, which ran through part of 2024 and the early part of 2025 through March. That, according to Jerome Powell, shows that there's now risk to the jobs portion of the economy.
From a year
strange?
Ago.
What's that?
From a year ago, April. But anyway.
Yeah. Did you find that strange that he didn't do that with the last revision to the numbers, which was basically just as big, if not bigger?
No, with the last revision, they cut a year ago revision, they cut 50 basis points.
Prior to the revision, right?
Right.
Yeah. So they didn't cut after.
Right. So, I posted about this and I said, Powell just complimented the work that the BLS is doing to improve data. I said, blink twice if you're in danger. So, I mean, I think this is all silly. Like it's a statistical, I guess, calculation, the BLS data. And I know markets trade on it, and you have to trade the sentiment that comes out of those reports, right? But do you really believe in those reports? And if the Fed isn't, if they're not trading, which we all know they are, but if they're not trading, then they should have a more thoughtful look at that stuff. And if they really have, I don't know, 800 or 900 PhDs, those guys should be very skeptical about those reports anyway, right? But evidently the PhDs don't really think very much, and they just run a bunch of Excel models or something like, or
they're government PhDs. Even if they were the most driven people on the planet, 3 weeks into their new job at the government, they'll take on the same sort of, it's government work attitude, right? Yeah,
exactly. And you've got to toe the line and all that stuff. So until they're told there's a revision, they can't be skeptical about the data. So, Powell who was a private equity guy, right? And so he's now told that there's a revision, and he's shocked. He's just shocked. And so, now it means something.
Yeah. But what does it mean? Are we, and this is a question for both of you, Bobby, is this because they then changed their tune saying that now there's going to be 50 basis points by the end of the year? You heard me say Stephen Marin said, definitely 50. The question is are we really going into recession or heading in that direction? Yesterday's retail sales numbers told a different story, and I have an opinion on those retail sales numbers, but I want to hear yours first, Tony.
I think that we have been in a struggling economy for a year, which is why they cut a year ago. And I think we're coming out of it. So they're doing a pro-cyclical cut now. I can't remember if we talked about this last week, but Powell and the team cut when they thought their preferred person was going to be elected president. Then they stopped when Trump was elected. I fully believe the Fed is political. They always have been. Look at LBJ, look at FDR, look at all these guys. They've always been political. So now I think we're coming out the other side of it. Jobs are always difficult coming out of a recession. They're always difficult, right? Nobody believes it when we're going into it, and everybody's saturated by it when we're coming out of it. So I think the Fed is leaning into this. They're probably smart enough to know that we're coming out of it, and that this is just going to accelerate the upside of it.
Bobby?
Yeah, I want to go, if I could, right to comments and questions, because I missed so many of them last week, seeing as I was upset over what had happened. The first comment from Widge, Marin looked like a clown today. That was a shame. I couldn't agree more. We've pushed back on Widge a couple of times. I completely agree with this comment. What do you guys think? What's that?
He's a company man, right?
Well, that's why he was chosen, right? This is, like you said, the Fed has never been apolitical. They can't be apolitical. They serve at the they serve at the president's feet, whatever. And if they're not the right guys, he will change them out. So this is a political organization. It is ridiculous. The reality of it is that particularly with AI right now, if the three of us took over the Fed, or with EJ with us, we love EJ too, by the way, that this is not that hard a thing to figure it all out. It is a hard thing if you under the political spotlight.
The three of us could run monetary policy for the U.S.
Yeah.
With our AI, we could literally run monetary policy.
I believe that 100% to be true. So here we are. We're going to get a dovish Fed. So what the hell are you going to do? Are you going to start selling your stocks and your gold and your Bitcoin? Shit, no, right?
Which brings us to the next comment there, if you don't mind, Tony.
Go for it.
Not sure if you guys saw, Jeff Gundlach recommended investors have 25% of their portfolio in gold. Any thoughts? My first thought, first of all, I got this right here. Anyone wants to see that? My first thought
give us
is,
your address?
What's that?
Can you give us your address?
No. I should pull out the pistol I have on my desk, but that would be a little, Twitter would probably shut us down. Yeah. My first comment to that is welcome Jeffrey Gundlach to what Jim and I have been saying since November of 2022. Tony, go ahead. What are your thoughts on that going forward? By the way, I did a Yahoo TV interview on gold on, I think it was Monday, and it's on my Twitter. And they asked me if gold could go higher, and I laid out my reasons why. So let's hear your guys' reasons.
So I've been saying since probably the inauguration, if not earlier, DX was at 90 or 91 when Trump left office in 2021. I believe this administration wants a weaker currency. I believe they're going to keep it in the 90s until the midterms. And then after the midterms, they're going to push it to the low 80s. Okay, so in 2027, I think we're looking at a euro dollar or a DX or whatever in the low 80s, because if you look at these Middle Eastern investors that are putting money in the U.S., this foreign inward investment, that's already dollar denominated. So they don't care. But the Korean and Japanese money that's coming into the U.S., they can't do it at a dollar at 98, 99, 100. They need a weaker dollar to put those hundreds of billions of dollars in the U.S. So I think we're going to have the midterms. That a lot of that Middle Eastern money is going to come into the U.S. before then. We're going to have a depreciated dollar after that. That's when the South Korean and Japanese and other money is going to come into the U.S. I wouldn't be surprised if some Chinese FDI is committed in these agreements as well. We'll devalue the dollar and depreciate the dollar. I know there's subtlety to those definitions, but we'll depreciate it in 2027. That money will come in 2027, and then we'll see the dollar go back into the 90s.
So here's, Bobby, my comment to Jeffrey Gunluck is that, this is kind of funny to me too, because when he said 25%, like you and I have been screaming that for a long, long time. Gold is one of my biggest positions. But right now, gold is obviously elevated. I don't see the situation changing for gold going higher, and I believe it will. But right now I'm at a point where almost reducing my exposure because it has rallied so astronomically. Gold in the last 25 years has had 4 down years. If you read Jared Dillion's, oh, by the way, I'm seeing Jared Dillion tomorrow. He's coming to Chicago, Bobby. But his book, Money No Worries, talks about the perfect portfolio, and he backdates for 75 years a portfolio that's 25% gold, 25% stocks, 25% bonds, 25% real estate, and 25% cash. That portfolio for the last 75 years has averaged 8% per year. Good, not great. But here's the great part. The single biggest drawdown ever of that portfolio was 12%. 12%. So gold being a substantial part of your portfolio. Welcome to the club, Jeffrey, I guess is what I'm saying. Either of you guys got comments on that?
Jim, I want your 125% portfolio.
Hold it. I meant 2020. Sorry. Tony just AI going, there's not going to be
yeah.
2020. Sorry.
Yeah, I realized I talked about the dollar instead of gold. You asked me a gold question. I talked about the dollar, but that's
same
kind of
thing, though, right? Yeah.
Same thing. Exactly.
Yeah. Same thing. Bobby?
Yeah, it's funny. Something that I was looking at the other day is correlations are sort of breaking down. Now, I don't look at correlations, but I'll give you an example, Jimmy and Tony, off the subject. RBOB, which is wholesale gasoline prices at the CME, was up 3 days in a row, not counting today, while crude oil was down 3 days in a row. The dollar gold correlation has been strong as of late, but it has not been all else equal, tit for tat, up and down.
You mean the inverse correlation, correct?
The inverse correlation, right.
Yeah.
It has not been tit for tat, up or down. Now, dollar and gold, their inverse correlation has never been even as high as 90, but it's been in the 80s, right? So I think what we're looking at right now is a situation where inflation is still stubbornly high. I'm going to go all the way back to when Jerome Powell said that we need to have inflation above 2% for a while to get an adjusted average of 2%. And I said at the time, this was a while back, and I said at the time, I don't know what an adjusted average is, right?
An average is just an average.
Yeah, it's an average is an average. But if you take out the sort of run up to 9% inflation, we're sitting with about 2.9%, 2.7%. I'll turn the question back on you guys. If we have stubborn inflation and now we have a rate cut, does that take inflation back up, number one? And number two, why would you sell any gold if you have a Fed that has inflation above their target and they are not fighting it?
Tony, you want to take it first? You want me to? I will.
Go ahead, Jim.
Okay, so I think the Fed wants 2.6. Somebody's got their echo thing on. 2.6 to 2.8% inflation for the next couple of years. I think they want to inflate away, monetize the debt, not just the federal government, but of the biggest, most profligate spending states and counties, and they're willing to screw us with inflation to do so. I'm giving a speech in New Orleans in November, And the title of it is Hard Money versus an Easy Fed. And one of the points I'm going to try to make, and please, any of you guys join us if you can. One of the points I'm going to make is that for my entire career, I've tried to figure out how to speculate, to make money, to take advantage of markets. I've realized over the last 5, 6, 7 years that a huge part of what I invest in is just to try to scrape to protect purchasing power. It's not even necessarily to buy a yacht or a house on the beach. It's just to not go broke. And we have to figure out how to not go broke with them devaluing the shit out of the dollar like they've been doing for years. And they don't seem to have any intention of wanting to stop. Cutting rates right now is another example of that. I don't think he wants 2% inflation. I think if you gave him the choice now between 2.7 and 2.0 inflation for the next 2 years, he'd take 2.7. Tony?
Absolutely. Absolutely. Yeah, absolutely. And I did a piece last month, late August, talking about the long-term expectations for the dollar and how, we believe that they will devalue the dollar partly to pay off some of the debt with some of the incoming tariff money. And so there are a lot of reasons why a short-term resetting of the dollar makes sense. A short-term in the medium term makes sense.
Got a question from Asia that I want to throw up if we could.
Love you, Asia.
Yeah, she's a really good friend of both mine and Jim's, and it's great to see her in here. What's the closest point in time that compares to the current situation? Now, there's a lot of things we could point to fill in that current situation part, but I'll take one if you guys will let me.
Yeah.
Inflation and stock market gains. If I had to look, I'd say there's probably the late 60s going into the 70s when inflation went from basically minus 7.1, turned positive, went up as high as, I think, Tony, about 13.5% in the 70s. Yeah. But we're kind of in that area where stocks were averaging 5 to 6% a year easily, and inflation was negative, turning back up. Now, inflation was not negative, but it does seem to be turning back up to me. Either of you guys want to take that, Tony?
I want to just inject one thing here too, is that if I saw that inflation that was going to be persistent and a declining economy, like I believe we are now, Tony believes it's coming out, I'm not 100% convinced of that yet, I'd be very worried about the stock market, unless we have a Fed who doesn't seem to give a shit about the inflation. Then the stock market, it's game on. So this is the only time in my lifetime, Asia, that I think the Fed is just basically saying, screw it. We can have close to 3% inflation and we don't care. I think it's troubling, but I think it's a tailwind for stocks. Tony?
What do you think, Tony?
Yeah, I think we're back in an end GDP, a nominal GDP moment, right? And so, what you're saying, Jim, is exactly right. And just because I think we're kind of on the tail end of a downturn doesn't necessarily think that I think things are really bullish, right? I think we're turning around. We're coming to kind of year-on-year steady state, I think. Does it necessarily mean that things are going to rally 15, 20% from here? I'm really skeptical of that, okay? I think, we have a drag. I think the drag is jobs, and the drag is not necessarily the jobs per se. It's the jobs expectations that have to catch up, right? So we're missing 1.8 million jobs over the last 2 years, something like that?
Yeah. Bob, I'm going to interject something before I throw it to Bobby. And Bobby, I would like to talk about oil because we talk about so many things going up in price. And for 5 years, oil's been relatively tame. Has it been 5 years? Whatever. But what I would say is that to this is that we talked about the jobs thing. And Jim Bianco has put out a piece and has argued vociferously and aggressively that with the new immigration policy, with the deportations, with the not people coming over the southern border, he believes that a stagnant population, which we have now, which is extremely unusual historically, I think it's probably unprecedented, that probably 30,000 jobs a month is what 100,000 jobs a month used to be, and it is fine. That's his contention. I say I don't believe it until I see quit rates pick up in the JOLTS, because that'll show me that people are feeling more comfortable. And perhaps I see then even job openings in the JOLTS trending higher. I don't believe the absolute net number of JOLTS, as taught to us by our friend Mike Singleton and Victus Research, doesn't matter, but the trajectory of those things do. Bobby?
I'll say this about anything from JOLTS. We're sitting here concerned about the response rate from the BLS with non-farm payrolls. response rate to things like the Conference Board's consumer confidence, some of the PMI figures. JOLTS has one of the worst response rates of any
like
data that we
30%.
look at.
Yeah.
It was funny because JOLTS is one of those things. I remember, let's go back to 2012, 2013, when I had to become a weatherman to be able to talk about crude oil, because we were talking about hurricanes going through crude oil. And then all of a sudden, everybody started looking at rig counts. Baker Hughes released rig counts for crude oil for the last 78 years. And all of a sudden, about 2013, we started looking at them. Now we don't look at them anymore. JOLTS had that same sort of feel. When would you say we started looking at it, Jimmy? 3 years ago?
Yeah, well, I remember Rick Santelli. Maybe it was more than that. It's probably 6 years ago.
Okay, let's go 6 years ago. If you look still to this day at like a Bloomberg calendar, Bloomberg, when you filter Bloomberg's economic calendar, you're allowed to look at 3 bulls, 2 bulls, or 1 bulls, and 1 bull. That's like Jim's 125%. 3 bull, 2 bull, 1 bull. As to the relevancy of the data, JOLTS is still at 1 bull.
Interesting.
So that's why I'm not saying that your thesis is wrong. I'm saying that the reason you're taking that stance, being the JOLTS quit rate, may not be robust.
Okay, can I put something here too? We talk about the fact that if there's anyone from the government who's watching, I know we get pretty widespread viewership. Here's the reason that the response rates are down. The society hates you right now after what you did in 2020, 21. There are so many people who think the government is just a bunch of authoritarian bullshit power seekers, and that's why they don't respond anymore. And if you want to know whose fault it is, go look in the mirror if you're at the government. These guys are a bunch of morons.
Well,
Tony, what do you think about all this?
They still owe my company our employee retention tax credits from 2021.
Yeah.
We're almost in 2026. And the IRS still has not paid my company our employee retention tax credits from 2021.
Yeah, we don't love you guys anymore.
We
think you're shit. Yeah,
right. So, Jim, I have a question. You said you were going to talk about oil, then you talked about JOLTS. So, what was your oil?
I said because we talked about inflation, and the one thing that we think is the single most important commodity in the inflation discussion is crude oil. And crude oil has been relatively tame for quite a while. I don't know why it's tame. Bobby probably has a much greater viewpoint of that than I do. But I wanted to know what Bobby thinks oil is going to be and how do we trade that?
So I don't have. What do they say? A dog in the hunt, a horse in the fight. What is it? How does
like
that?
Yeah,
it's
horses,
one of those.
They fight all the time.
Again, crude oil has a characteristic. And Tony, I know you look at the crude oil names on occasion, if not every single day. The crude oil has a characteristic as an asset, and it is consolidation within whatever range it settles in until there is a supply or demand shock. The shocks are usually supply shocks, not demand shocks, but you can get a slow grind of demand that essentially provides the same trend. Crude oil has had nothing of note unless you go all the way back to January 23rd, when crude oil collapsed after I don't know what drone attacks.
No, I remember. I was trying to. We should know what. I know what.
Yeah, we should know what, but I don't. So I literally have not had a crude oil position since I traded a double top that didn't work a while back. So literally, it's like I haven't had a crude oil position in probably a year and a half. So I don't have anything. And again, when you look at it from a perspective of crude itself, the refinery utilization number dropped because of planned maintenance and some unscheduled maintenance too. There were some Gulf refineries that had some breakdowns that caused some unscheduled maintenance. The refinery utilization dropped, and that's what caused RBOB to go up when crude oil was going down.
That's what I was going to ask. Okay, good.
Yeah. And so you're looking at it as gas prices going higher while crude oil is going down. So everybody's running around. Crude oil is lower. Why is my gas price higher? Because crude oil is not gas, not in and of itself. From that perspective, I think the next move for crude oil is likely higher, but only if the rate cuts work, right? The steady supply of crude oil continues. If there's a Russia-Ukraine breakthrough, it could be to the downside. I don't have.
But here's what I'm going to say to both of you. Do you guys find it kind of astounding that we all agree that the dollar probably has about 68% of its value that it did 5 or 6 years ago? And a barrel of oil that's priced in those dollars is still roughly the same, meaning the actual price of oil has gone down, if you want to make that argument, because of the fact that the dollars are weaker. Is that astounding to you, Tony?
Not at all.
Right.
So we do forecasting for some of the energy trading desks, all the contracts and cracks and spreads and stuff. I'm not surprised by the crude price, partly because when Trump was campaigning in his first few months in office, he talked about energy prices a lot. And his team feels that energy prices are a huge component of inflation. And they've worked very hard to get Middle East countries to open up supply. We may have Venezuela as a part of South Florida at some point soon. And so, if things like that happen.
Kind of already like that here, but go ahead.
Right. So if things like that happen, and if we have a breakthrough on Russia, Ukraine, like I do believe that Trump doesn't like people dying, but I believe that the Russian supply openly on the market is a huge factor in his priorities, because he wants that Russian supply on the market so that, say, Middle Eastern oil isn't going to India. India wants to buy Russian oil. Let them buy Russian oil, right? But you can't let them buy Russian oil if Russia's continued doing stuff in Ukraine. So he wants a breakthrough there so Russian crude can come on the market so that, other stuff can happen as well, because that alleviates the supply constraints that we have. So, I'm not surprised that crude is where it is. I wouldn't be surprised if there's some downside to crude, but it depends on what happens with Russia, Ukraine. It depends on what happens with Venezuela as well.
Bobby, do we have the ability to put up a chart? Because I want to talk about nuclear for a second. Do you remember about a month ago where I started expanding my positions in nuclear and I bought NLR, which, by the way, I don't recommend individual equities, but I will tell you the things that I am doing. NLR I have, and UEC I have. UEC Tracy gave me. She thought it was a good one to expose yourself to nuclear, and NLR is an ETF. I actually think that nuclear is way underappreciated right now. Every time we talk about AI, data centers, the amount of energy that is going to be needed right now, that's the only thing that's probably keeping it in check. Do you guys, when you look at that chart of NLR, when you think of the backstory, do you think it's the time to do it?
NLR, let me look it up. Sorry.
Yeah, look it up. Northern Lights.
What's that?
Northern Lights? Who is that?
Isn't NLR nuclear?
Uranium.
Tracy's here. Tracy, what's the ticker of that stock?
UEC is the company, that Uranium Energy Corp, and NLR is the ETF that I also have.
NLR has been on fire since April.
Yeah, that's because of me. Because when deep pockets like me come in.
Okay, there it is.
And UEC, same thing. So it's all you, Jim.
It's all me for sure. Okay, good. As long as we're clear on that, everybody.
Yeah. So, we've got to see, I think a lot of what's pushing nuclear is the data center stuff, right? And so, we've got to see, do we continue to have the momentum with AI that we've had? If we don't continue, and also, do we continue to have the processing intensity that we've had? So if we don't need as much energy to do the processing for AI that we've had, then the energy demand won't be as much as it was, right? And so the demand for nuclear won't be as high. Potentially.
One last thing before we take a quick time out for a commercial break. But I will say that if we are not building the nuclear reactors here, somebody else is going to. You guys agree with that, right?
Oh, yeah. The French.
Of course.
Yeah. So, I mean, it takes us 15 years to build a nuclear reactor. It takes China 4. So we either figure that shit out or we're not going to be the leaders in the AI thing. It seems simple enough. When we come back in a second with, good. Tracy is with us right now. I love when Tracy's with us. But time out real quick. Luis, can you put up the banner? For those of you who've been watching the whole time, you know what I'm about to say now, and I really appreciate all the support you've given us on this project, and I'm going to ask you for a little bit more. Please scan that QR code and try Tradier's Tradier Pro options platform for 3 months for free. We talk to people who have been trading options their whole lives and talk to people who are novices, and they all share the same opinion about the Tradier Pro platform and that it is top notch. The people who scan it and use it for a while, you will not want to give it up. Thank you guys for supporting us. So now back to the AI theme. So if you're in agreement with me, and again, I have NVIDIA, I have AMD, I have Micron, I have Google, but I want to look for tier 2 and tier 3 AI trades now, things that haven't been zapped up by everybody else. What are your ideas on that?
It's a lot of it's a lot of it's played out, man. Like,
Yeah, because there's smarter people than me who are scattering around. Like,
you kind of have to be really careful what you're buying, because, if you buy any of these AI software companies, a lot of them are simply AI, APIs into large LLMs. So, then you have to look at hardware companies or the service providers, right? And so there is this big kind of circular reference of NVIDIA to CoreWeave to OpenAI to, they're all it's all this circular kind of valuation play. So I would be very careful. I'm not enthusiastically pointing to anybody. I think you need to look at actually the companies that are using AI to improve their services, not necessarily the core AI services themselves.
That's Nancy Tingler shared that exact opinion when she was on with us. She talked about companies like Walmart and Deere being very, very good at implementing AI, and I thought it was really interesting.
Guys that come in, all these guys who are integrated into their manufacturing platforms, other things.
Yeah, and I think that is extremely important. But Bobby, my conclusion that nuclear was going to be a huge part of it, and I don't know if that's why it's rallying. Was my reasoning sound, do you think? Is that a good place to be to take advantage of it?
I want to kind of blend a couple of your themes if I could, and
probably do it a lot better than I can when I start.
Well, just if you think they're I don't know, they're in contrast to each other or not. So you disagree with Bianco that 20,000 a year is a good number. And I don't agree with that either. I think that's a weak number. But we also sort of all agree, Tony, if I'm speaking for you and that's not right, let me know, that AI is a huge productivity boost for companies that apply it correctly.
Correct.
So if it is, that productivity means hiring is going to be depressed, does it not?
It does.
Or is that just blending these things together too simply?
I think it's too simple. I think what it does, and I'm going to talk a little bit about my company, but this isn't an explicit plug, but we help corporate finance teams be better, right? And so just because we go in and help corporate finance teams be more efficient, it doesn't mean you need to cut jobs. They can focus on more strategic things and more operational things within the company, right? And so, I hear this kind of desperation that you have to have universal basic income because AI is coming in. It's like that's some kind of university professor's thesis that they're really pitching desperately around the internet, right?
He's got the Ukraine flag and his icon, and he talked about Charlie Kirk. That same guy is doing all the bullshit. Okay, go on.
Right.
Yeah.
So, you can deploy AI within companies and just make the company better, right? And so if you look, for example, like we do some audit stuff, right? We do a lot of audit stuff. The way auditing is done right now is you go in and you sample invoices, okay? You manually track how that invoice went through the pipeline to see if it was done right. The way we do it is we look at everything and we'll tell you exactly what the issues are with your audit, right? And it takes us 12 minutes to do. It doesn't take you 6 months to do the sample and chase things down and everything else. Again, I don't mean this to be an explicit plug, but that just shows you ways that people can use AI to improve their company. It doesn't mean you fire people.
Asia's got a comment, Louise, I want to throw up sort of in this vein. She says that this period of improved efficiency, Yang calls it the sticky window. Does that mean that the window's not going to stay open? Is that why it's sticky? I'm kind of
Andrew
confused.
Yang seems like the nicest guy on the planet. I love that you love him, Asia, but I also think sometimes I don't know what the hell he's talking about.
She followed up here, and I'm glad she did. Hyper efficiency without letting people go.
Oh, that's what Tony's saying. Maybe, right?
That means productivity, but that doesn't mean adding other people, correct? So that means that the non-farm number could stay stable, sort of where it is. I'm not trying to defend Trump, by the way.
We have political leadership that is trying to gain efficiencies within our companies to have more jobs in the U.S., right? Yeah. So what does AI do? It makes people more productive so you can actually do more, so you can have the businesses here. It's the right thing, right time. Like this is the technology for right now, right? So I think we have the processing power in place already. A lot of the steep learning curve has already been done, right? So we just need smarter adoption and wider adoption. And companies, whether your viewers realize it or not, manufacturing companies are using AI through their entire manufacturing process. They're using it in their sales process. And so have you seen major cuts? Well, maybe in things like coders. I mean, look, I've got a company of 4 people. okay, we code like 20 people because we use AI in our coding process. Okay. And we don't want to be a 100-person company. We want to be a small, smart, lean company that applies AI in really smart ways for big companies and little companies, right? And so you can do amazing stuff and be lean and do great work. So I think the productivity of what this generation brings doesn't necessarily mean job cuts because we're trying to do more here. I think what the problem that is presented by AI is outsourcing. So all those services jobs that were done in India and Vietnam and Eastern Europe and all that coding that was done in Eastern Europe, you used to have to give up your trade secrets and IP to have your software built in Eastern Europe or in Vietnam or India or elsewhere. You don't have to do that anymore, okay? You do Claude Code or you do something else, and you use these tools to get it done here in the US or in Europe or wherever, instead of having a team of folks who you have no idea what they're doing with your trade secrets and your IP, a team of real people actually doing stuff. So, so you can have it done with AI here in the US.
So is this the thing then, the AI productivity, is this the thing that actually makes what I call the Besant-Trump experiment actually work?
Yeah.
I mean, if you cut down on illegal
AI.
immigration, yeah, you deport people, you give people higher paying jobs with the assistance of AI. I feel like this is too simple to
You're
just
so
say
MAGA.
this. Why? Let me tell you this. Pam Biondi should be ashamed of herself. That ain't MAGA.
No, that's
And
not
this-
MAGA at all. Right.
Yeah, and this 50 basis point Byron guy or whatever the hell his name is. I'm gonna call him Byron, even if that's not his name, because Byron sounds like a shill. Those two guys, that guy should be gone. And Pam Biondi ought to be ashamed of herself for saying hate speech.
Think about this, guys. If we had cut 50 basis points today, that's an oh crap moment for the economy, right?
No doubt.
I mean, if you cut 50 or 75, guys who have money in markets are like, oh my gosh, things must be worse than I thought.
Yeah,
right?
That's what they say always.
Whereas if you cut 25, you're like, okay, this is what we expected.
Right.
And that's it. But a 50 or 75, people are scratching their heads going, there's a problem that nobody's talking about.
Yeah, it's funny. That's a great thing for traders that are watching this, because one of the things that put up Tracy's post, Luis, while I'm saying this, one of the things, I did a webinar for a company today on risk. And one of the things somebody asked me when it was Q&A time, Tracy says 100% people would shit at 50. And Asia just put up her disclaimer, Luis, if you can put that up too. Not market advice, just so you guys know. Yeah. I did a webinar for a company today on 5 trading mistakes and risk management. So for traders watching, one of the problems with trading events is what Tony just described. Okay, Tony described how when you're trying to trade events, you're not only trying to trade the outcome of the event, you're also trying to trade what the market expects that outcome to be. Yeah, which is extremely, extremely difficult to do.
It becomes a coin flip, people.
Yeah.
Yeah. It's not, your strategy goes out the window. I closed everything out right before the announcement today. By the way, I swear to you, I traded probably about 60 futures contracts total, 30 by 30. And I came out up 75 cents because I had a handful of those micro.
That's a good day.
What?
That's a good day.
Yeah. Oh, yeah.
I mean, look, there's 3 possibilities when you're an active trader: a win, a loss, or a break even, and 2 of them are good.
Yeah, break even's fine. I laughed though because I was short the stocks, and I covered it about a half hour before the announcement, and then I got the 6 or 7 point S&P plunge that I wanted to make me have a good day. But anyway,
trade today. I'm just hanging on to this.
Oh, can I make a point about the labor market? Because I know if we had Luke Roman on here, here's what he'd say about you said I love Luke, by the way. Universal basic income.
We all love Luke.
Jobs. We used to say learn how to code. Now it's probably shifting into learn how to wire, learn how to craft. You know what I mean? We don't even have anywhere near. I'm talking about like an electrician, by the way. We have nowhere near the amount of tradesmen that we need. And that's really, why would we ever have universal basic income? Over 2 generations, we've been telling our young men not to be plumbers, despite the fact that people will pay you a shit ton and you'll have great job satisfaction. I bought a bar. It turned out to be a tradesman bar every day at 4:30. These guys are some of my best friends. 1, they make a ton of money. 2, they love their lives. They love creating things, fixing things. We always thought getting your hands dirty for young men meant like a lower class. We were wrong. Bobby, you got any comments on that?
I think you're right. That's
You
all,
weren't
that's
even
all it is.
listening, and you said you think you're right. So you've been married a while now. You do that very well. I know you're so right, sweetie.
Yep. You're right. There's a comment by Wisdom I want to put up for a very specific reason. The PDF wants everything to crash fast, and then he would blame Powell, and then him and his crypto bros in the cabinet would pick up stocks in crypto cheaper. Market will correct anyway. I don't know what PDF is.
Me neither. I thought it was a PDF was a file.
I don't know. Is
you
Asia
know
still
what
in
that
there?
is.
She might know. Anyway.
Yeah. One of you guys are out there smarter than us. PDF. We can figure this out. It's like one of
Hey,
those
it's
programs.
Stock Charts just has something funny. He said, Bob, are you sure that's 100% gold, not tungsten? This is actually a fake gold bar. I was speaking in Las Vegas.
By the way, I could tell by that it wasn't heavy in your hand.
Yeah, it
Yeah,
looked pretty
this
light.
is CME Group was giving these out when I was speaking in Las Vegas last week. So they were also giving away like 4 of those real ones. And I was not
Nice.
allowed to be in it, which I think is bullshit.
Well, how many ounces are one of those real ones?
This is what, like a 6-ounce bar or something like that?
Seems like it. That's what I would guess. That's a lot of gold right there.
It's a lot of fake gold.
Well, that's a lot of fake gold,
Just so
right?
you know,
Okay, but I want more investment themes. Which is, remember, this is supposed to be a market show, but now it turns into a screwing around with a bunch of guys show, and our buddies who are watching. Right, so let's bring it back. So, are we in agreement that the best investment theme remains the weak dollar trade and how to position yourself for that, which is commodities first, stocks second? Is that an accurate description of it, Tony?
I mean, obviously it depends on your horizon, but I think it's something you definitely have to be aware of in the kind of medium term, right? Yeah. I mean, short term, obviously, but over the medium term is where we see real momentum to the downside for the dollar. So I would definitely be aware of that for your medium term outlook.
Bobby?
Yeah, I'm going to put up a chart. I agree with that statement, Jimmy. Obviously, like I didn't set out for Luis, I'm going to put up a chart just so you know. I didn't set out for gold to be the large holding that it is for me right now.
Yeah.
But it's become that way. So I may end up selling some gold anyway, just to kind of get things more in balance.
Once you get too top heavy, right? Yeah.
Yeah. But Luis, can you put this up? This is the Qs. Okay. Now that red dotted line is where I said I would buy, and I had a limit order in there for a small amount of Qs. I didn't get any. But who sees this and doesn't like the Qs going forward?
Rejected the low.
Yeah, exactly. The sell-off rejected. And as we know, I mean, what's the 2 things that are going to benefit the most? Tony, you could tell me if your research has debunked this lately, but the 2 things that should benefit the most from a series of rate cuts, which is what the Fed predicted, right? Today, they said is going to happen, is technology and small caps.
Yep.
Right. And if I change this real quick to, I'll do the RTY, I'll do the future to the Russell.
If you guys are wondering out there why it's technology and small caps, based on the discounting model that every Wall Street analyst uses, growth stocks are like it's discounted future cash flows. And when you juxtapose that against a certain interest rate, it looks much more beautiful. And
Money's
small
cheaper.
caps are 3 times more likely to use revolving debt. So they benefit from lower interest rates as well.
So Remo just asked a question about the small cap. So I put up the ETF, the IWM. Remo, would a weaker dollar be bearish for IWM? Tony, what does your research tell you?
Not necessarily. Yeah, I don't necessarily think it depends on the rate of decline of the dollar. You know, if it's slow, then I don't think it's bad. If it's fast, then yeah, I think it's bad. So
we got much better price action in tech as I put up the Qs again.
So why, Bobby,
why
a weaker dollar, particularly if foreign products are becoming more expensive, benefit the smaller caps who tend to be more domestic in the small caps?
I'll tell you what I did sell before this Fed meeting was MAGS, which is Round Hill's Magnificent 7. I sold at 64.40. Right now it's about 64.08.
Nice call.
Yeah, I sold it yesterday, but it's acting the exact same way, obviously, because the Qs are acting that way. It's tech. So it just seems to me that, like, go ahead, Tony, what?
I think we got to wait until the morning and see what happens overnight. I think
totally agree.
You know, I'm curious about, you know, financials, guys. I mean, as we see rate cuts coming, what are your thoughts on like XLF?
That is a great question because, you know, I have Goldman I bought Goldman because Hillary Clinton was going to be president, and that was my trade. And I have a quarter of the position still on. Yeah.
I told somebody today in a meeting that one of my business partners thinks that Google is the CIA. So I think it's difficult for you. It's difficult. That's Jimmy.
Yeah.
It's difficult for you to be short financials with an easing Fed. A lot of other things have to happen. And we did see, let me confirm this real quick on my little thing. Yeah, we saw a little bit of flattening of the curve 5s to 10s. Curve 2s, 10s is unchanged. But I suspect we'll see a steeper curve. Jimmy, would you agree with that, being the interest rate guy, or no?
Yeah, no, I definitely think that. I was surprised today when the first reaction in the 10-year was for lower rates. Then they changed that and became higher toward the end of the day. And for those guys watching, here's the thing, that if the Fed is more easy on the short end, that could reignite inflation. We've been talking about that the whole time. That should really kind of erode longer-term bond investor confidence and steepen out the curve. Banks love a steep curve. They love to borrow on the short end, lend on the longer end, and be on the golf course by 3. That's what they would really love, and that's one of the reasons I'm long banks. And I look at this chart. Well, we did reject those highs, but I still think any strength above all those recent candles looks to me a settlement above there, and any sort of strength gets game on.
This is a weekly chart, Jimmy, and you've seen both of you actually. So this is that rotation zone that Mike and I always talk about. Here you've got a cross, which means nothing to us. I always like to tell people we don't trade moving averages, crosses, right? And you see this is zone widening, right?
But you do trade widening zones, right?
Widening zones when it pulls back into it. Yeah.
Right.
So it pulls back into here. You can get long here. There's a rally, pulls back here. You get long the next day. And by the way, we get long with a bullish candle. It's too much to go into right now. This is what we call 8 pushing the price. This is the 8 exponential moving average, and this is a weekly. So the 8 exponential weekly moving average is starting to push the price higher, which indicates a potentially stronger trend in XLF.
Yeah.
So it doesn't have to develop. It indicates that might be developing.
So technically speaking, what's not to like, right?
Yeah. Tim is telling us the 10-year is up 10 basis points in the last 75 minutes.
Yields are. Okay. That's interesting.
Yields. Yeah.
That is what I saw. They bought bonds right after the announcement, which I was surprised by.
They did, but the 10-year yield yesterday settled at 405.
Mm-hmm.
Okay.
Yeah.
And the 10-year yield right now is sitting at 408.
Okay.
So you can say it's up a lot in the last minute. And by the way, that's 75. It's 7.5, right?
Yeah.
Because it was down earlier.
Right.
So it's not 75 basis.
No, it's
not
basically well behaved, but it still might be giving us tiny clues.
It's only up 2 to 3 basis points from yesterday's settlement, which I think is what we need to pay attention to, Timmy. But thank you for that, Tim.
Okay,
Keep us posted if it goes up in the next 12 minutes.
So we have a weekly newsletter. One of the things we talked about was gold is poised for a breakout. We already talked about that, right? Mm-hmm. We talk a little bit about Apple, and I'm curious about your view because you said you sold the Mag 7. It's kind of meh, right? We can't really see what's going on there. So I'm curious with kind of that type of technology. It's not necessarily AI technology, but what do you think about something like Apple? Are you interested here? Or are you just kind of waiting to see what happens next?
If Apple gets down to about, I'm looking at it right now. I wish I would have kept my chart up. If Apple gets down to about 221 or so,
yeah, well,
I'll take it. But right here, I've got issues with
it out, right?
Because on the daily, it's slightly up sideways, right? Slightly up sideways. So from my perspective, I don't have a particular pattern here. As a matter of fact, I have the potential for Apple to collapse if it gets below 225. So I have a very easy entry and stop there if the story of Apple is intriguing to me. I don't know, man. Like I've held Apple for a long, long time. I've been lightening up on it for a long time now because it doesn't seem to be the juggernaut it was from a perspective.
Particularly when you compare it to Google and Amazon and Microsoft and Facebook. These are companies that are slugging it away in the AI race at a better pace than Apple seems to. That's why I sold out. And you guys know I talked about selling out most of my Apple, but I still have the Google and Amazon, which Google's getting kind of big, so I'm getting a little worried about it. Tony?
Yeah, I think you're right. I mean, again, those four that you're holding on to, they invested in it at the right time. They invested a huge slug. They're not necessarily getting the revenue return on it. They're betting on the investment over the long term. Apple has chosen to sit by the sidelines, and either they're going to buy somebody or they're going to use someone else's tech. And I don't, maybe they've made a decision on that, but I'm not sure they're committed either way on that.
Yeah, I just think that the era of Apple was a long run, and I don't think they're going away. I mean, they certainly have.
They make great hardware.
People roped into their ecosystem that would have a difficult time extricating themselves, and that's beautiful and wonderful. But I don't think they're going to be the cutting edge that some of these other companies are. Yeah.
Yep, that's right. That's
All
right.
right, a couple of comments in here. Widge says, "What is Mr. Greer?" It's Mr. Nash, by the way. This is not Tony Greer. It's Tony
I
Nash.
love Tony Greer, though.
Yeah, he's a great guy.
Yeah.
What is Mr. Nash's takeaway on the Fed consolidating around the 25 basis points? One dissent shocked me.
Before Tony answers, I have a question about that too. What the hell happened to Waller and Bowman?
Yeah,
well, they wanted this last meeting. I guess they were okay, right?
What happened to Lisa Cook, right? I mean, these are not friends, right? These are people who had every political reason not to do it. So, I think that Chair Powell really worked hard to get some consensus, probably made a lot of promises to get some consensus and give Trump what he wanted, and said, look, let's wait till next month to fight, but this month, let's just do what needs to be done. And so, what happens next month, I really don't know. I think we need to see the data. I really hate saying things are data dependent because the quality of data is crappy, but you just kind of have to see what happens in earnings. You have to see what happens with forward-looking stuff to really understand. I've been really clear with you guys, and my followers on X understand this, but I don't trust any government data from any country. So I don't look at any of it. I'm looking at market clearing data. You have to look at market clearing data.
Jimmy, I just want to clear out these comments and questions.
Sure. It's all you now.
You can wrap me up. Yeah. Tracy's called Apple crapple, which I think is hysterical. I'm going to jump over its stock charts, Luis, and go to Tim. Tim says Apple is the new BlackBerry. And then I have a question that I will do. It's stock charts, which is Remo. Why not sell covered calls on Apple? For me, since I've been selling the stock, I have a limited amount of risk capital. So when I'm talking about things I've done, it's risk capital for me here, right? Talking about things that I actively trade. Yeah. And Apple's one of those things I bought, sold, always with the intention of buying it again. I'm not selling it with the intention of buying it again right now.
Right.
So
I have most of my Apple in a tax-free
hold, which I'm not doing on it.
I have most of my Apple in a tax-free. Had I had it in my taxable account, I probably would have structured options against it just because of all the capital gains I would have had, which, by the way, there was a time a couple of years ago where I had written covered calls on it, didn't pay attention, had like 5 of them, and was taken out of 500 shares of Apple that had gained like triple their value for what it was. It was one of the most painful days ever because I wasn't paying attention because of the capital gains tax. But anyway, Tony?
Yeah. No, I'm not going to comment on any of that stuff. You guys are much more.
Okay, so 2 real quick comments from Widge. If Tony's still with us, it looks like everybody's frozen but me. There he is. Okay, Widge says dough, and then he says apologies. No problem, Widge.
It's okay.
And then Wisdom A has a great question here. Will Japan increase rates on Friday? Carry trade just saying. I just want to say real quick that to me, of all the central bank meetings we've had, this is the biggest wild card in terms of market effect, in my view. Jim, Tony, what do you got?
Tony first.
Yeah, I think you have to pay attention to Japan. I think Japan's in a difficult place. I suspect they will raise. I don't think it's going to be dramatic, but it's more the direction than the magnitude that matters right now because, we're trying to extrapolate what's going to happen over the next, say, 3 to 6 months. And so this meeting, they'll give the real direction on where they're headed. And in the typical, BOJ ambiguity, I think we'll be able to make some sense of where they're heading.
So tell me, there's been several different head fakes, like we're going to unwind the yen carry trade and it's going to be horrendous. And I've fallen for the head fake a few times. Japanese rates have gone up quite a bit. Is there still this huge glut that's waiting to head the exits in the yen carry trade? And I don't know. So this is a long-winded way of me saying, I'm just not sure.
Yeah, I think there's a lot of people who want exposure to Asia and are happy to sit in yen. And, where else are you going to go? You're going to go into yuan. I mean,
No.
you have no idea what's going on. New Taiwan dollars, Singapore dollars, maybe Singapore dollars, but you can't go into Hong Kong dollars because you have no idea what's going to happen there. And you're going to go into rupees. So I think you have some capital sitting in Japan that's waiting for something, but there's really not a huge motivation to move.
So it makes sense to me. Bobby, is that good?
Yeah, we're good.
We're all cleared out. So let's wrap it
cleared
up. Tony,
out.
tell them where they can find you, Tony Greer. I'm just kidding. Tony Nash. Has a shot at you. Yeah, right.
Greer, when I was doing the week ahead, Greer was one of my favorite guests. Really,
I love
great.
Tony Greer. He's such a good guy.
Yeah,
you can
he's
find
great.
us. You can find me on X at Tony Nash Nerd, as Bob says. You can find us at completeintel.com. And we're just all over the place. So contact me. I respond to almost everything, actually. So thanks, guys. I really appreciate this.
Trade Ears and Trader's Edge. Thank you guys so much, by the way. This is one of my favorite shows to do. And I'm not just thanking Tony and Bob, but you guys with all the input on this. You guys make the show way, way better. And we're glad to be part of it. Remember, Bobby and I were in Legacy Media for 25 years each. And every time we were there, we were under the pressure of some overzealous producer or sponsor telling us what we could and couldn't say. The Trade Air platform, we can say whatever the hell we want. We are opinion journalists and traders. So we plan on saying whatever the hell we want. If you hate it, you hate it. But thank you guys for joining us. I'm Jim Iuorio. That's Bob Iaccino.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.